Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about a CME gap and Bitcoin. You probably heard of it before. What does it mean? Well, let's start out with what is a price gap? A price gap is essentially where you have a difference between an opening and a closing. So we have that on equities markets, not so much for Bitcoin, but it will apply to the Bitcoin CME gap, and we'll talk about that. So let's say in a session, you open here, here's your low, here's your high, and here's your close. This is a OHLC candle, or in a regular candlestick, you open here, and say you close up here, open and close, a bullish candlestick. Let's say the next day you open here, and you close up here. Sure, this is a gap. There's a price gap. Nothing happened in between. So that is a price gap. Well, what's CME? CME is Chicago Mercantile Exchange. Essentially, it's a futures and options place, right, where people trade. It's been around forever with commodities, kind of everything else. And now that Bitcoin is mainstream, and it has been for years, traded in CME, I think since 2017. If I'm wrong, you can let me know. But the CME gap is essentially a gap when on Friday there's a certain price. When equities markets close on Friday, Bitcoin doesn't close. It keeps on going, right? So what happens is on Friday there's a CME price of Bitcoin. Let's say it's here. Okay, it closes here. And let's say over the weekend, the Bitcoin price keeps going up. So what happens is when CME opens up on Sunday night, it starts here. So it closed here and it opens up here because, the Bitcoin price continued. Now you have a gap. So there's a theory. A lot of people think that CME gaps must be filled. Like here's an example on an image. Price closed here. It trended up over the weekend. So CME closed up. Now, it took a while. This gap took, 6, 7, 8 months to fill. Some gaps fill, but not all do. There's gaps from like $300 and $3K and $5K and $10K. So there's gaps kind of all the way up. They generally will fill, but they must not fill. There's no reason that they have to fill, and there's no time frame by which they must fill, right? So even if they do fill, it might take a long time. So there's an example. Here's another example here where it closed up, and then CME started down here, and it took a while. This one closed pretty quickly, actually. But it's just the idea that the Bitcoin price continues when the Chicago Mercantile Exchange stops, when those options contracts stop on Friday, because normal traders take the weekend off. They're not insane crypto traders like we are. And when they continue on Sunday night, when that market opens up, you can see the information here. 4 p.m. CT on Friday and 5 p.m. CT on Sunday is when it opens up. Then you get this gap in price. They don't all have to fill. Many of them do, but even if it does fill, it might take a long time. So this is just a little bit of information. I don't take them seriously. I don't trade them at all. I don't factor it into my analysis at all, but some people do, and that's definitely your option. But this is a CME gap and Bitcoin, and this is for the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chads out.